When I walked onto a trading floor in the early 2000s, it was packed, like Wolf of Wall Street, boiler room packed. Phones are ringing, people screaming, swearing, yelling, standing up with phones pinned to their ears, selling, buying. The energy was electric, and it was dripping off the ceilings. And sometimes it was even dripping out of people's noses. Anyway, artificial intelligence is transforming every corner of the financial world, from investment banks to trading desks to the apps that we use to manage our own savings. And this isn't some distant future. It's happening now. The question isn't if AI will change investing, it's how fast and how far it will keep redefining the game. Let's dive into the evolving landscape of AI in investing, the possibilities, the risks, and what it means for professionals, institutions, and everyday investors like yourself. So fast forward to today. Trading floors have shrunk to like a quarter of their size. The first trading floor I worked on at Daiwa was in Tokyo, and you literally could not throw a baseball from one corner of the trading floor to the other. In fact, many would struggle to kick a football and hit the ceiling. The UBS one in Stanford was even more impressive. But that's all gone now. In 2000, over 60% of the New York Stock Exchange trading was done by humans. Today, over 80% is algorithmic. Trading desks went from 20 plus people to 5 or 7 at max. And every desk now has access to top programmers and quant strategists feeding models to help streamline workflows. I mean, you can hate it, but it works. AI has already made deep inroads to the financial system. Algorithms making decisions in milliseconds, analyzing signals, executing trades, and adjusting portfolios in real time with teams of developers to support them globally. Take algorithmic trading. Machines now execute the majority of trades on global exchanges. They're faster than any human, capable of scanning dozens of data sources and placing orders across multiple markets in under a second. Now, high-frequency trading takes this even further, where firms use AI to exploit micro-opportunities across millions of transactions, gaining an edge in markets that move faster than any human can comprehend, including arbitrage over global exchanges. But it's not just speed. AI has also brought intelligence. Predictive analytics have changed the way firms assess risks and uncover opportunities. And hedge funds like Bridgewater, Two Sigma, and Citadel have been on the forefront of using AI models trained on vast data sets, including earnings reports, social media sentiment, headlines, the tone of words used by the Fed, satellite imagery to estimate Walmart parking for traffic, like truck movements, crop health, or even weather. All these are being used to forecast market movements, evaluate creditworthiness, and price assets with incredible accuracy. One fund analyzed the number of cargo ships outside of Shanghai in real time during the COVID epidemic to model global supply chain pressure and trade flows. I mean, gone are the days that hedge funds used to hire ex-CIA, MI6, and Mossad guys to get this kind of information. And no, I'm not kidding. I've had beers with these people. They were absolutely incredible. Robo-advisors are also reshaping retail investing. Platforms like Betterment, Wealthfront, and Schwab Intelligent Portfolio use AI to manage portfolios automatically. They rebalance accounts, optimize for tax efficiency, and adjust to user goals, all with minimal human intervention. And behind the scenes, AI is powering risk management and fraud detection. Financial institutions are using machine learning models to identify suspicious activity, flag potential fraud, and evaluate systemic risk in real time, a task that was previously handled by large teams of analysts and controllers. Obviously, the previous methods brought about some gaps. It's what happens when we take humans out of these roles and replace them with AI agents. I mean, this is what's happening in my former business, though the old guard is fighting tooth and nail for every seat they got left. The benefits are clear. Fewer mistakes. AI systems don't suffer from the fatigue, emotion, or cognitive bias. They just stick to the data. They have faster execution. Machines can scan markets, analyze risk, execute trades in fractions of a second. They have lower costs. Fewer human advisors and analysts mean leaner operations and lower fees, so overhead goes down. There's scalability. AI systems can handle thousands of portfolios or monitor billions of transactions without breaking a sweat. But it's not without risks. Oh, come on! First, model risk. AI is only as good as the data it's trained on. Bad data leads to bad outcomes. We saw this during the 2020 flash crash when algorithms fueled extreme market volatility. Second, systemic risk. As more firms rely on similar AI strategies, their models may react to the same signals, amplifying market movements and creating nasty feedback loops. Third, a lack of human judgment. In times of crisis, human intuition and experience still matter. AI can misread black swan events or fail to understand the nuance that isn't in the data. Having a tech guy guy who hasn't traded or has no experience with the Kobayashi Maru type scenario, with the clock ticking down, is pretty much never going to make the right call. I can guarantee that. It's not just that the roles are disappearing, it's that the DNA of the trading floor has changed. The old school traders or relationship guys, they get replaced once the clients they have relationships are replaced. And finally, as I just discussed, job displacement. Traders, analysts, advisors are being replaced by machines. That's efficient for firms because it drops overhead and headcount, but it's disruptive for the workers that remain. The finance industry needs to rethink how it trains and deploys talent in this new AI-first world. So where's this all going? Well, we're moving toward AI-driven personal finance, where intelligent systems don't just manage your investments, they help with the budgeting, the goal setting, the insurance decisions, the retirement planning. AI will act like a 24/7 personal CFO for every consumer. Look at what Copilot and ChatGPT or even Apple's next-gen Siri are doing. In a few years, they'll help with your monthly budget, they'll rebalance your retirement accounts, they'll negotiate your car insurance, and optimize your taxes. In simple English. On the institutional side, expect AI to take on more portfolio construction, risk modeling, and regulatory compliance roles. Tools will become more autonomous, not just assisting humans, but making independent financial decisions based on a fluid, ever-changing 24/7 marketplace. Everything will become utterly efficient. And that's the problem for human traders. You make money when you can exploit inefficiencies. That's why emerging markets in China, and even still Japan to some extent, are still vastly profitable, whereas the US and Europe are way more streamlined. Emerging applications are also on the horizon. So natural language processing will allow investors to talk to their financial tools like they're talking to a human advisor. And you have generative AI, which will be used to stimulate market scenarios, test investment strategies, and write custom research reports on demand, all pulled together and formatted in a matter of seconds. There'll be AI-driven sentiment analysis, which will scrape social media, news, and analyst opinions to provide real-time sentiment scores for individual assets. This used to cost me a coffee, sometimes lunch, and took one of my juniors most of the day to put something together. But we'll all see AI play a bigger role in climate risk analysis, ESG scoring, and impact investing, helping firms align portfolios with environmental and ethical goals. But with great power comes great responsibility. Imagine an AI denies someone a mortgage because their zip code is historically underbanked, aka redline. Not because of them, but because of the data. Multiply that by millions of transactions and you get a systemic bias at a massive scale. So the bias in AI is a serious issue. If training data reflects historical discrimination or blind spots, AI will just replicate those flaws, but at a much bigger scale. And it's possible an unforeseen event would be the one to trigger them all to simultaneously blow up. Then transparency is critical. If investors don't understand how AI made a particular decision, how can they trust it? Accountability is another gray area. If an AI makes a bad trade or misses a risk signal, who's responsible? You're a bad robot. No new NVIDIA chips for you. I mean, what are you going to do? Financial firms need to ensure AI systems are explainable, they have proper oversight, are auditable, and fair. Regulators are paying attention too, and new rules will likely emerge to govern AI's role in finance. But here's the bottom line. AI isn't here to replace every human in finance. It's here to amplify our capabilities. The firms and individuals who thrive will be the ones who embrace this transformation, not fight it. I mean, that's what management told me when we had to push DMA or direct market access and algo trading to clients back in the mid-2000s. Management would shout out, "Hey, this is going to be accretive. It won't take away from your business or your bonus. It's what we call cross-selling. You're offering the whole optimized trading suite to the clients, okay? It's what they want." No kidding. No kidding, it's what I'd want too. What it did in the US was drop the average commission per trade by over 90% on the institutional side and 100% on the retail side. It did completely what management said it wouldn't do, and that's fine. That's the way the business in trading and servicing clients has always been. It's progress. Jobs like I was in for 20 years just will not exist in the same form in the next 10 or 20. It's not even the same now. Just like DMA and algo trading rewrote the rules 20 years ago, AI is doing it again. The question isn't whether it will replace the old way, it's who's willing to evolve with it. So whether you're an investor, advisor, analyst, the best move you can make today is to invest in your own understanding of these technologies. Learn how AI works and utilize it, especially how agents work and how you can put them to work for you. Understand what it can and can't do. Experiment with the tools, ask questions, and adapt. Play around. That's the best way to learn. The future of investing is already here. It's faster, it's smarter, it's more data-driven than ever. So don't wait. Start today. And with that, please like and subscribe to my channel. Remember, kindness is the rent we pay on earth, so do something nice for someone.